What's going on, guys? I hope you're having a good day. And as you can see by looking at the screen, we're going to be learning about what order blocks are and how to use them very effectively in order to trade. Order blocks are a very, very important tool to guess where the market's going to go, and they are very efficient as well. Now, I'm not going to talk too much and just get right into the video. Alright, so I drew out this because, as we know, this is how the market moves, right? Market goes up, down, and then down, up, right? That's how the market moves. Now, the order block is this move down before the move up. So you see how this is a move down right here, from here to here, that's a move down. The move down before the big move up is known as the order block. And when price enters back into that area of where the order block is, we are most likely going to go up. So I'll draw out the order block for you guys. So from this high to this low right here is the order block, because that was the move down before the big move up. This is the big move up that I'm referring to. And then price re-entered this box or this order block right here, and we exploded back up. And this does not just happen only on lines, it happens on the charts, and I'll show you guys on the charts too. But right now I'm just trying to explain something to y'all. So that's what an order block is. That's a bullish order block because we're going to be going up right after it hits. There's also bearish order block, so just vice versa. So the bullish order block is the move down before the big move up. The bearish order block will be the move up before the big move down. So in this case, I'll show you. This is a slight move up. I'm sorry, my drawing wasn't that good, but on the charts it will be a little more clear. But from here, this low to this high, that little move is the move up. From here to here is a move up. I'm gonna zoom in a little bit so it's actually easier to see for y'all. Yeah, this is probably much better actually. So that's the move up that I'm referring to, from here to here. That move up before the big move down. And when this is called a bearish order block, because we're expecting to go down after price enters that order block. And what happens? Price enters into that order block right here, and we just dump down. And now I'll show you guys examples of this on the chart. All right, so first we'll take a look at a bearish order block. So as you can see, this is a move up before the big move down right here. I'll zoom into it a little bit more so you can see it if you're having trouble spotting it. But this is what I'm referring to. This, and I'm only gonna start it from the body where the move up started, not the wick. You don't want to count the wick from where it started. You want to count the body. So the body will be this, because this was the low right here. This black handle will be the body that I will be using, because that's where the low was that created this high, right? You know what I'm saying? So we started going up from that low. That's why I'm marking it from there. And this wick I wouldn't include, because most of the time the reactions are strongly off of the bodies of the candle. So now I'm going to stretch this. Oops, let's Command Z. I'm going to stretch this out as much as I can. And now I have my bearish order block marked out on the chart, the move up before the big move down. And now what am I expecting? Sorry, that's my bad. When we enter into the order block, we are expecting a reaction down. And obviously, it's not going to work every time. It's only when it respects it, but it does respect order blocks most of the time. But obviously, nothing is going to work every single time in trading. Even liquidity sweeps, as I taught you before, you need confirmation with it, which is the break of structure. So you need to be looking for order blocks on the higher time frame. Then as soon as price enters into the order block, like right here, you need to be going down to the lower time frames, like the 15-minute, 5-minute, and seeing if it breaks structure to the downside. If it does, then most likely you're about to start going down, and it is respecting the order block. If it doesn't, then good thing you didn't enter shorts, because it's not going to go down and it's going to keep going up until it breaks structure to the downside. So that's how you would use order blocks to frame a trade. But now let me just show you another example of a bullish order block. And as you can see, this bearish order block literally fulfilled it, like got respected perfectly. We re-entered right here. We consolidated a bit in this area. We were still respecting it. We didn't go above this. If you go above the box, if we close out above, then that's called disrespecting the order block. Then we did not disrespect the order block. That will create an inverse order block, which I'll get into in a future video. But just know, as long as we stay within the box, we are respecting the order block. And look, We went in the order block and boom, we just dropped all the way down to here. Now I'm gonna show you an example of a bullish fair value gap. Alright, so one example of a bullish fair value gap will be right here. This black handle is a move down before this big move up right here. So I'm gonna mark out the body of that that black handle all the way down to the low. And I'm only going for the body. Now I'll stretch this order block out. And as you can see, now I have my order block box. As soon as price entered back into here, we went right back up without disrespecting or consolidating or anything. This delivered perfectly and beautifully, and it delivered multiple times actually. As you can see, that's one tap right there and it went up. Then it went and tapped into it again, and boom, the big move up happened. And even a third time actually, I didn't even notice. Even a third time it got respected. It tapped in, respected a little bit, went down a little bit, respected it, and boom, big move up. Fourth time it disrespected it right here because you can see the candle closed below the box, creating an inverse, which I'll get into again until a later video. But I hope that this all made sense, and I hope you understood what order blocks are now. If you have any questions, please comment them down below because these are actually very, very useful in the markets. See ya.